Ladies and gentlemen of the crypto space, we're live on a Monday, May 9th at 11:43 a.m. And this is the most important topic that we could discuss right now. And it's really the absolute need that no action is warranted. This is basically sit back and watch an absolute shit show unfold. This is a period of austerity, ladies and gentlemen. We saw this really at the end of 2018, which led into the Powell pivot, which really hit us hard in 2019 and set up for an entire market collapse towards September of 2019. People mistakenly think the market collapsed in March of 2020. That was merely the equities markets, and the equities markets are basically leftovers. The equities markets are an afterthought in the global financial system. The United States banking system collapsed in September 2019. Most people don't talk about that. That's what the repo crisis was. It was the failure of the United States banking system. So what's pertinent is not necessarily to compare to 18 and 19 and the Powell pivot. They bastardize global financials to such a degree after March of 2020 that this is a much larger event. This is a much larger series of sequence of events that are going to play out. And it's going to take time. This is ultimately like a slow moving train wreck or maybe a celestial event, if you want to think in those terms. Where it takes like a million years for a supernova to explode. It takes weeks and maybe months for this entire system to collapse in a deflationary implosion. I'll pop it over to the main screen. We'll take a look at 10-year bonds, 3.077%. It was up at probably 3.1718 this morning, and they've come down a little bit, so there's been a little bit of bond buying. So what's unique about these market conditions compared to pretty much, I'm no macro historian. That's like Lynn Alden territory. But as the S&P, which is what I watch, the futures have been collapsing through supportive long-term moving averages. The bond market has been selling. So there's some very powerful forces going on that's not just the froth, which is the equities market. So if the equities markets are going to collapse, everyone sells their shit and buys bonds. And that's the history of these cycles. But everything changed after 2020. And now we're entering some sort of new macro flow of capital where clearly we have the geopolitical conflict going on, but it's more than that. This has to do with deglobalization and the fight over natural resources, so on and so forth, and the power play of raising rates, which strengthen the dollar and crush foreign fiat. So there's a whole host of narratives that can be discussed to try and understand the sequence of events to play out. But what's most pertinent is that the S&P and equities markets are collapsing through the support of moving averages as bonds are collapsing as well. This is the worst bond market since the 1800s or the late 1700s. The bond holders have lost enormous value. This period of time in the last year has completely destroyed the 60-40 portfolio. 60% stocks, 40% bonds to be defensive, completely annihilated, crushed. The portfolios have been destroyed. Retirement savings and all these 401ks have been completely decimated. So that leaves us with what I want to talk about, which is the crypto space and how I attack markets. I don't entertain a 60-40 portfolio. I don't think that's the future. I don't think that's how we get to do what we want to do and achieve some degree of financial freedom. You got all of crypto Twitter, you got social media and YouTube screaming the end is near, and they're leaving and everyone quits because probably they lost money. And maybe they haven't listened to my types of conversations, or maybe they haven't and it hasn't worked out well. There's no guarantee. Just listening to me means better decisions, better than worse decisions will be made. But these are the types of conversations I hope will help people make those better decisions. There's very little to do right now. There is no bottom. Bottoms don't just appear out of thin air. Maybe the bond market capitulates and we see a rapid rise in bond price and the yields start to collapse. Now you're talking. Now you got to watch and you got to see those events unfold because they mean something. A capitulation, something has changed in the structure and the directionality of capital flow. As of right now, this looks positioned to completely implode. Folks in macro land are talking about VIX. If volatility breaks out, it's going to cause margin calls or just complete leverage collapse, and then you see that fast acting decline will smack right into the 200 EMA and the weekly for the S&P, and that's the territory we'll find ourselves in. And at this point, then you got the big banks and you got hedge funds that are screaming that they're going to go out of business, they're insolvent, and everyone's losing their money. And this is where you get into those late night meetings of the Federal Reserve and the Treasury. Are we going to help people? Are we going to do a bailout? And that's where we're heading. We're not there yet. Can we see capitulation before those types of emergency conversations and emergency situations arise? Sure. Am I going to do something before that? No. Am I going to do something immediately after that? Probably not. I'm just going to sit back and watch this as a disturbing spectacle, a reality of perverted proportions that these people have created. Now, if I see a period of prosperity start to emerge where there's a complete perversion of the financial system to a further extent with additional Fed acronyms, stimulus, and bond buying, and QE, triple QE, quadruple QE, yield curve control, and the sacrifice of the dollar, I see something very systemic that's meaningful, that's indicative of potential capitulation. I'm going to let it happen. I'm going to wait. I'm going to wait for consensus to say that it's working. And once consensus say, like Wayne's World, game on when they're playing hockey, sure, game on. But until then, it's game off. I'm going to sit back. You got to watch. You got to wait. Too many folks are entertaining this period like it's not a period of austerity. This is a period where they're going to take everyone's money from them because there's too much demand, and that's exactly what the Fed says. And they want people to stop buying things such that demand side inflation can come down, demand to meet supply. And when demand meets supply, the retailers can no longer increase prices because no one's buying shit. And some degree, maybe you'll even get some deflation. I highly doubt that. Too much cash available, too much savings. There's a couple $1 trillion available in the U.S. and you know older generation savings accounts, so they'll just keep buying. Um, so that's the difference between a period of austerity and prosperity. We have to wait for a period of prosperity because in a prosperous market, the market is just giving you money. If we go back to a period of time like May 2020, with the experience and knowledge that we have now, especially all you rational folks and Captain Rational's various social medias, we're going to have some fun. We have so much more experience now, so don't try and make money in these market conditions. This isn't when you make money. This is when you're grateful that you made something over the last 2 years. You sit back and you look in hindsight, in retrospect, to analyze and understand what the heck you did, why the heck you did it, and how the heck you could do it better. Don't try and make money in these markets. You're going to get absolutely crushed, guys. Protect your protect your McNuggets. Got to protect your McNuggets. Raul's in the house. Tyler, Noah, can we assume the bottom is near when we start QE again? No, I don't like thinking in terms of bottom. I like thinking in terms of this market isn't going to start going up until everyone's crying uncle. It's full on capitulation. Maybe bond yields keep ripping, the bond market keeps collapsing, and we get a derivatives market margin call, and there's $50 trillion worth of bond demand, and bonds get completely cleaned out. Like every single bond in circulation gets purchased. We see the mother of all God candles to the downside. They get stuck at 0%, and then they fall right through into negative territory to the point where there is zero liquidity, zero sell side liquidity. If there is a big enough margin call in the derivatives market, there will not be a single bond on the planet left available. It will all be purchased, and the only way they can purchase it is if they sell everything and anything they can to raise the capital. Why? Because there isn't $50 trillion worth of capital available to be worth of assets to liquidate to raise such a quantity of capital. Every single stock on the planet totals $14 trillion. From what I see, there's $50 to $70 trillion worth of sovereign debt, and there's $750 trillion worth of derivatives around the world. A $50 trillion margin call, a 25, $10 trillion margin call. If there's a $10 trillion margin call, where are they going to get the bonds? They're going to have to buy it from the bond market. Let's say it's a $50 trillion bond market. They're going to have to buy 20% of every single bond in existence. 20% of every single bond in existence isn't available on the market to be bought. It'll clear the order books. It'll be an absolute order book clearing event like we've never seen. So that's why I watch the damn bond market. If we see bonds keep collapsing, which is yields keep going up, you're going to get a damn margin call. And what what makes me nervous is that I don't understand the Eurodollar market enough. And this is like Jeff Snyder and Emil's territory. I don't understand the collateral, how it's managed in that. I understand derivatives because we deal with derivatives in the crypto space. I understand how collateral is managed, liquidation thresholds, margin calls. I understand all that stuff, but Eurodollars are a black box to me. And really, honestly, Eurodollar is a black box to Jeff. Jeff only sees the indirect information, and there's really no data to the inner workings of the system. And this is all everything that everyone talks about regarding Eurodollars. It's completely black box in many regards. We only see the halo or the knock-on effects in some regards. So how about that? That's food for thought. That's what I'm looking at today. I see bonds, they're sleeping right now because we had our event and now we had the rebound. We had the bounce from the bottom, the intraday bounce from the bottom. You guys should be seeing this on a daily basis at this point. There's always like some sort of clearing event through the day, whether it's bullishness or bearishness. And then you have the rebound, the reversal, either to the downside or the upside. The upside more recently, but the bearish push to the downside, and a little bit of pump to the upside towards the afternoon time. And that's where we are. This morning we were watching S&P open, starting to push down through the 100 SMA. So now we see the bump going back up. It's about 4 points, give or take. Now here's exactly where previous support flips resistance. If the bulls can't get it back above the 100 SMA, this thing's going to print a support flipped resistance, and this thing's going to absolutely get annihilated to the downside. So sit back with the cash, the USDC, the GUSD, the USDT, or whatever stablecoin of choice you're interested in, and wait. And wait, and don't try and get returns. Don't try and force yourself to get yield on those stablecoins. Sit in the damn stablecoins. I'm sure a lot of you guys are sitting on curve positions, convex positions. What are those things doing for you? They're paying you every week. You're going to drive yourself mad looking at the price point because curve's bleeding out a little bit. We get a nice little bump here, but this thing obviously is a downward, lower low, lower high trajectory. Curve looks probably the most solid out of any crypto asset in the crypto space. It's absolutely wild. This chart is one of the most spectacular charts that come to mind. I mean, look at this. It's not even below $2. It's an extraordinary chart. And it's really just indicative of the systemic entrenchment, the moat that it's built, the federation that it's built, the monetary policy, and the way the capital flow is playing out, the sheer demand for other protocols to place it in reserves. There's just constant buy pressure. The circulating supply is completely removed from the market on a daily basis. Absolutely extraordinary. That does not completely eliminate whatsoever a bearish capitulation to the downside, but it just indicates that there's trends and flows in this asset, in this chart, in this ecosystem, and in this federation that are very unique as compared to literally everything else in the entire crypto space. Now, look at Bitcoin and look at Ethereum. They're getting completely annihilated to the downside. I mean, if you bought $10 Ethereum or $200 Bitcoin, you don't really give a crap what's going on. But that's not the point. The point is, yes, they're depreciating significantly, and anyone bought a 50 grand Bitcoin, they're getting hammered. But and obviously, if you bought a $4 or $6 curve, you got hammered. the extent of what I'm trying to say is the structure of the charts, the structure of the capital flow. There's an entirely different narrative to be told for this asset versus Bitcoin, Ethereum, or what have you. Partially because Curve pays you hand over fist not to sell it. Quite an extraordinary reality. That's why it's a topic we talk about so often, and why it's a critical, meaningful component of the portfolio, even considering these extraordinary bearish times where I expect the entire system to completely collapse. Don't get me wrong, the numbers are going down, portfolio's going down. But what's pertinent is the cash position's going up. The bank account's going up. Every week the bank account's going up because it's structured as such. The total portfolio balance is going to go down, but nobody's staring at the value of the pizza shop on a weekly basis. All they give a crap is the pizza shop still pays you that weekly salary, your income. You get your paycheck. So this plays into the topics we talk about with regard to how to structure and segment the portfolio, the psychology and how to think about different components of the portfolio, the modeling and the analogy we draw on macro financial systems, legacy financial systems, business systems, and that helps us tell the story of what we see in the crypto space, why we look at different protocols and different assets the way we do. And it gives us the capacity that we've created thus far is to build a game plan and how we find comfort. Look, look at the market capitulation and look at the comfort. I'm cool. All right, fine. I got a little bit of anxiety, but I'm basically chill. I'm about to eat some lunch. I'm going to do some work. I'm going to stand up, walk around the house because I prepared. I prepared for the market to completely get annihilated. I'm like, all right, I got my stable coins. I did as good as I did. Next time I'll do better. They juice the markets. Next time I'll do better. Next time I'll have more stables. Handle it better. That's the deal, boys and girls. Mark's in the house. Mathusin's in the house. DJ Short Sleeve. Short Sleeves in the house. Ian Red Dan, a pleasure. YS, long time. No see. Vasco, when everything will collapse so we can buy the bottom. Yeah, you don't want to necessarily buy the bottom. I like to think about it is once bottom occurs, it forces capitulation and likely intervention. And I like to see the system stabilize first. Like obviously, if the Fed gets on the big screen and they start talking about yield curve control and four-letter acronyms, yeah, then I'm going to start getting interested. I don't mind buying up 20, 30, 40, 50%. I would like to buy after the bottom has been confirmed. That's why you wait for the higher high, the breakout, resistance to flip support, uh, retest, and the higher high, the trifecta of bullish confluences, which is some stuff we've talked about since the good old days of 2020, 2021, when we did some of our capital gain strategies back in the day on like Matic and whatnot. Very different world, very different conversation that I talk about nowadays. I don't really talk about those things much anymore, but that's we've come a long way. It's been a lot of stories over the last couple of years that we've told. YS, thank you. Tony, too much. No, my man, buying the dip can be fun. Yeah, there's no dip buying at all for myself today. I'm trying to sell as many things as I can, and I've been able to raise a little bit of capital, which is nice. I'd probably trim a little bit more if I could, but I'm not in a position to, and I'm generally comfortable. Um, maybe no real maybes. I'm watching the bond chart, watching S&P futures. I'm itching to see if this prints a support flipped resistance. Basically, the white line. If this closes below the white line, and maybe you get a push back up to the white line tomorrow, man, this is going to be a heck of a week. There's going to be a lot of fireworks to the downside this week. Barry's in the house, a pleasure. Breakless Rider, Crypto Bets looking for a CVX entry, not FA. How does the chart look to you? CVX looks horrible. It was a bit of an inverse head and shoulders type of structure, but that doesn't look so hot. I like this purple box region. Um, it's not really updated, and I don't know if I need to adjust it. It's kind of just a legacy purple box I have, but I like to see above this green line right here at about 15.41 because that was a previous high. That was a previous resistance that flipped. So here's an interesting one. And this is what I kind of showed the other day is if you turn off the price point and you just look at the time weighted average price. I mean, this is really what you care about. And look, it's kind of a rounding bottom. So, and is it a lower low? Are we pushing below the purple box? So that's quite interesting. So there's a lot of strength in this chart that most people overlook when they start looking at the price action. So I love looking at an average price and the time weighted average price, and maybe even the monthly. We don't have it yet. It's too much of a new asset. But on the weekly, we have a time weighted average price, which is much smoother than the price action, which is very misleading. Imagine if you were looking at this chart, it ran up, saw a little bit of bearishness, and we start to see a rounding bottom. We don't have an RSI to go over to see if there's higher lows. Really, it's not a very robust RSI reading, and I don't have the MACD up. I'm not going to get into that right now. But it does look like maybe we print a higher higher in the RSI. That'd be nice. Volume is completely non-existent. Let's put the price action back on. So what I'd like to see is $15.41 hold, because that was a previous resistance. And what I know for a fact is all of this is bullshit. All of that. Useless. Doesn't mean anything. All of that was irrational exuberance and the market digesting how completely insane and out of control the price action went. And what is the real chart? Right here. That's the real chart. Previous resistance, and imagine something like this. Let's take these off. Nope. Let's put that back on. Imagine it broke out and it went like this. Uh, I don't know. And it never really got much higher above 15.71, and now it's retested. So it retested once. It's probably going to retest again. And that's what I like to look at. That's what makes me comfortable with this type of insane price action volatility. Up to 60, down to 20. Let's see if it goes down to 15, because the number that looks important to me was 15.41, was a previous breakout failure, previous breakout failure, previous breakout failure, previous breakout failure. So it's 4 breakout failures on the daily, a breakout, insane irrational exuberance, a retest, the hold support. You can't make it up. It's literally right on the chart. Oh, escape button. I mean, it's literally right on the chart. Look, previous resistance, previous resistance, previous resistance, previous resistance held as support. So the price point back here that people thought it would never go above was where people literally started buying. So that's what these types of uh, ranges or levels that people refer to as a critical level. So if we fall down to the 15.71 or higher, 17.19, um, maybe on another chart that was yeah, that's previous support. So look, if we fall down to 17.91 and don't get below 17.91, that's an extraordinary price point. But that doesn't mean it's not going to go further down. That just means that it held support. Support is a position of weakness. Support, holding a support, is weakness. What is strength? Resistance flipping support. And that's the classical bullish upward staircase pattern. It's clearly not bullish. We're looking for support here, which is a position of weakness. Food for thought, food for thought. Hope it helps, guys. Let me find where we were in the comments. Brian, hope all is well. Hope you had a great weekend. It's good to get away for a little bit. Mother's Day weekend. Happy wife, happy life. Check out the chart for Temple Dow. Is skeptical the RFW would hold. Yeah, I'd probably be skeptical of that too. I'm not interested in many of the Dows. The only thing that interests me really is Citadel. And in this period of austerity, I'm not going to be deploying any damn capital. That's for sure. I think we all need a rational stream. Crypto bets, you're very welcome. Fly me high. Nice to catch a live stream while commuting to work and watching the market implode. Well, that is very much the case. What is going on? Protect yo chick. Well, no, it's actually got to protect your McNuggets, which is Cheeseburger Eddie in the longest yard. Got to protect yo McNuggets. The one with Adam Sandler, the longest yard. Classic. Dennis, why would there be a margin call? Do they not have dedicated persons working on risk management? So the derivatives market is a $750 trillion market collateralized by sovereign debt. As the yields go up on this chart, the price of the bond is going down. What happens if their AVE position gets to a health factor of 1.01? They're shitting their bricks thinking they're going to get liquidated on their leverage long derivatives positions, and they're going to scramble to find as much collateral as they can. So they can basically buy every single damn bond in existence in order to prevent liquidation. They don't want their AVE health factor to get below 1. Crypto bets, what's your take on the Do Kwon selling BTC to protect UST peg? Eh, he's walking a fine line of complexity. He's building a system that's very akin to the historic fiat currency backed by hard asset system, albeit obviously is controversial that Bitcoin is considered a hard asset. I personally like what he's doing. I believe that the system needs to be built to see if it works. And frankly, I think it is equivalent to the historic systems. The only difference is lendiness. Clearly, if it survives and it makes it to another cycle, the lendiness builds. And then people start to believe in it, that it works. And we'll see. And it's the type of system you root for. You really want it to work. And if it works, great. If it fails, great. Whatever. We're still dealing with the market. This is still the most opportunity filled market in existence, period. So we're going to digest what the hell's going on to the best of our abilities. We're going to attack the market to the best of our abilities, and we're going to protect the crap out of the McNuggets. Hi, Cap. How do you see CVX bribes playing out in the bear market? We're going to see decreased bribe activity because the bribes are paid for as depreciating assets. But that's okay because income is still income. It's a period of austerity. Expect to make less money, expect to have less money. And how do you compensate? You spend less money. Oh, shit. That's exactly what the Fed wants. They want us to spend less money. So we're going to make less money. Doesn't mean we have to force outperformance. Doesn't mean we go into the market and take excessive risk and lose our shirts. No, it means we accept reality, we be protective, and we engage with the market the way we've learned how to engage with the market. Nothing at all changes with the things we've observed over the last couple of years. You get your weekly cash flow, you save it, and in a bullish time, maybe you don't sell the yielding curve. You don't sell the yielding FXS because stuff's going up in price. And that's always the question. How much do you save versus how much you invest? You get, $1,000 a week in FXS. Do you save 500? Do you keep 500 worth of FXS? Do you sell it all for the $1,000 in cash? It depends on everyone's individual subjective needs and risk tolerance and goals, so on and so forth. Fran Corp, a pleasure. George, no, I just found your channel in the last weeks. Love the content. I'm sure this has been covered before. But your favorite secure method for interacting with DeFi, any particular hardware wallet? The only thing that I feel comfortable with is Ledger. And MetaMask is useless. Frame.sh. So frame.sh connects to your Ledger hardware wallet. And it just works as compared to I'll never use MetaMask. Again, it's absolute garbage. It's so sluggish and laggy. It's the most annoying thing. I don't. It's just there's no logic or rationale to ever go back to that. Great pronunciation of my name, Methusen. Appreciate what you do. You're very welcome. I hope I get. Sounds like I got it right. Yay! New York state of mind. Should I take stables out of GUSD? Earn position at 6.9. Sounds like I should. Unknown. What is that? Gemini earn? I don't know. I'm not. I'm not comfortable being exposed to pretty much anything with my stables. I need my stables. This is my savings account. I need it to cover overhead, bills, so on and so forth. I consider it my bank account, and I think that makes great sense going forward. Thoyo, what's up, Cap? Oliver, hey, George, how about FXS? Let's take a look at FXS. Let's see what it's doing. It's been getting hit pretty hard, but obviously it's a relatively large component of the portfolio. 17% hit. Yeah, it's getting hit. It's not printing lower lows. I mean, look at this region. My God, look at this region. Look at that region. Is that $10 to $27? It's large volatility region. But there's your lows. I mean, maybe if you want to show some support, you print it a little bit higher, something like that. Or maybe even closer, like right around there, because he got a lot of breakage down there. Okay. Heck of a region right there, boys and girls. You want to see this probably hold, 15.98, 5.96. Again, a little uneasy in the stomach if it's breaking down here, but who cares? You got either a CVX FXX position. I guess you could liquidate that, but I opt for the VEFXS position. And not much I could do whatsoever about liquidation. So I like that. That's why I really love the VE, the vote block, voter escrow positions, and I don't have to really think about can I liquidate? No, I can't. Done deal. I don't think about it. What do I think about? I think about how much it pays every week. So pitch is Temple throws out some money every week in the future rewards. They bend and I messed up the gauge votes last week, but they've been throwing out 150K, so that's a couple $100 a week. It's nothing to complain about. But also, I put some cash in Frax, just Frax, FRAX, and that prints cash, a nice weekly salary, so nothing to complain about there. I think it's going to do very well during this bearish market. Thanks for the CVX breakdown. You're welcome, Crypto Bets. Poke Angel. What do you think about STG Curve V2 pool bribes? I hope it creates an incentive to stop liquidating. I know psychologically they have to pay for people not to sell. And the most capital efficient way to pay for people not to sell is to have someone else pay for you. And that's exactly why Curve is doing what it's doing, because people bribe, so Curve will pay for people not to sell. If people are providing liquidity, they're not selling. So that should, in theory, rationally dry up a little bit of the excess liquidity and prevent some of the undesirable sell pressure. That'll be nice to see. Obviously, STG's been hammered hard, and it's not a position I have that's liquidatable. The position I have is the bond price, which was sold at like 25 cents a pop. And that was a no-brainer for me to take, no matter even if it depreciates below it. Think it'd be great. Stargate, they want to bribe 5 mil tokens. Yeah, I look forward to any and all bribes. Dima, hey Noah, still holding out on Spell. M Spell paying about 30%. Yeah, I took the little bit of Spell that I have left over, maybe like 20 grand worth, and I threw it in to the M Spell position. I like everything he's doing. I always like what Danny's doing. I like the software. I like the CDP technology. I like the leverage, the gen box. There is nothing about Abracadabra I don't like. The only thing that's undesirable is the price action, and that's because the vast majority of the general public just they don't appreciate it. They don't really understand what the product does, and that's okay. I don't have to own something I really like, and if there's favorable market conditions where the something I really like happens to be appreciating, great. The worst thing to do with your capital is to buy something you really like and not sell it because you really like it. Allegiance to the damn portfolio is one of the narratives we started this entire stream with. Buying and selling have nothing to do with whether you really like something. I really like Spell. I really like STG. I really like a lot of things. I really like Rook. I got rid of that stuff. I lost like 100 grand on that stuff. I really like these things. I'm not going to own things I like if they're going to depreciate. Sorry. And I'm not going to own things I like if they're not paying me not to sell them. Sorry. This is a very simple game, but you got to get over the emotions. The emotions of liking something, hodling something is a burden, and it likely leads to the outcome you don't want. George, you're very welcome. Curious View, you following Mimspell, M Curve play? Yeah, the M Curve's pretty cool. I just went over that stuff. I like it. How's it going today, Liv? Got a little sniffle. About to eat some lunch. About to do some code. I'm stuck on a dependency that's driving me nuts. A Gradle dependency resolution. There's some conflicting attribute during a Gradle compilation. It's absolutely driving me nuts. it's just a rabbit hole. If you've ever gone through dependency conflicts and upgrading dependencies, I'm upgrading Kotlin, and it's causing like 5 different dependencies to explode. I upgrade one dependency, it causes another dependency to explode. The most important thing is to keep your dependencies updated and have a proper cadence with dependency management. Otherwise, you get into these types of complexities, and it's a real burden to dig yourself out of the tech debt. More bullish on Arbitrum or ZK Sync. I like all three: Optimism, Arbitrum, ZK Sync. That stuff's going to be hot. Protocol. No idea about the tokens. I have no idea nor any interest at all. What do you think about synthetics? Synthetics is how we started this whole stream. Synthetics was one of my first positions in late 2019 that significantly appreciated from 70 cents to $7. So that is a nostalgic asset. It is very productive, and it looks like it's building one heck of a federation on optimism. They're late to the party. They came online very late into the DeFi sequence of events, but they're going to be here and they're going to grow, and the next cycle is going to be very interesting. I'm not sure if you touched on it, but what do you think about the seemingly coordinated attack on Luna and UST? It's been relatively resilient. They have reserves. That was the whole point of reserves. So they're doing what they said they were going to do, obviously in a centralized implementation, but that's because the centralized implementation isn't currently available. So that is what it is. That's what they do. And that's what they did. And that's what they had to do. So, okay, great. Groovy, grand. Move forward. Looks like they've stabilized everything, and that's good to see. I like what I've seen. There's no reason not to. They have big, bold ambitions to build a hard asset, digital hard asset, backed stablecoin. You have to build it to see if it works. So I'm a fan of innovation and engineering, so they're trying to build it to see if it works. I look forward to it. You work out or go to the gym sometimes or running. I really need to start again. I grew up a lot of weightlifting. I've been big, and I'm turning into an old man at this point, sitting in front of a computer chair. Dependency, how I feel your pain. Yeah, man. Any good economic books for newbies who want to be like myself? Real Vision, realvision.com. Real Vision's the big stuff for macroeconomics and everything economics to try and understand pretty much all the stuff I talk about and what's going on in global financials, my friend. Live Synthetics paying out a lot right now. Yeah, that's right. Synthetics pays, but obviously the price point is quite volatile and it's depreciating. I mean, I'm just heavily focused on Curve for a reason. Uh, the price action is absolutely wild. This is the craziest chart considering macroeconomic conditions. It's literally the craziest chart considering macroeconomic conditions. I don't think I can say that enough. It's just the bottom line. Let's wrap it up for today, ladies and gentlemen. Monday, May 9th at 12:21 p.m. As always, I thank everyone for joining. It's an honor, a privilege, and a pleasure. Tell everyone to subscribe. If I help one additional person, it makes my soul happy. You know the deal. After party on Discord for the most rational community in the entire crypto space. I love every guy and gal in there. If anyone needs any personal assistance, one-on-one, noahseidman.com. Links in the Twitter profile. I will see you again on Wednesday. I wish everyone a good day now.